Investors and traders, welcome to the channel. Today is 31st of May 2024. Hope everyone is having a great day. Today is Friday. It's 31st of May. It's the last day of the month as well. So another trading month has concluded. And what is important is what we are looking at the screen, which is the daily chart of the Dow Jones Cash Index, Dow Jones Industrial Average Cash Index. And here we were watching for a key timing window to come in, and which has concluded, which you can see was between 24th of May to 29th of May. And we were looking for this correction to complete by this date. And what we have seen is the market, a number of these markets that we follow actually hitting key price levels at key Fibonacci ratios, which we'll begin to take a look at the moment. So just wanted to reiterate that the window that we were looking at, we saw a nice price action move in Dow Jones come in and other markets as well. So the market was able to find support right from the 78.6% retracement and rejected lower prices, while other indices intraday were a little bit weaker. The Dow Jones, which had been the weakest of all of these indices that we discussed in yesterday's previous video, Dow Jones was actually performing much better right from the start of the trading day. So what we have here is a timing coming in. We were looking for 29th of May, either with 2 to 3 trading days either side, and with a shorter trading week. It was really important to see how the market will close today, and it has closed positive, so that's a good thing. And when price meets time, the pattern is complete. So I believe we have a completed pattern, and the expectation would be for higher prices to come. And the next key date is coming in on the 1st of July 2024, which will be the 1.618 extension. And if the market begins to close below the 78.6% retracement, then maybe there's a bigger cycle which is pushing the prices lower, and then of course we'll have to watch for the next key date. But as of now, the price has met the timing, and in my opinion the pattern is complete, and we should be looking for higher prices as long as this Friday's support levels are held. All right, so we'll begin by taking a look at the foreign markets first. It's going to be a shorter video. I will just cover the equity market. So let's take a look at the FTSE 100. So the FTSE 100 actually bottomed 30th of May, so a day early, and it bottomed right between the 50% and 30.2% retracement. And you can see this ABCD pattern which had completed. We saw a price decline right into this support zone, and here is the market symmetry concept. This correction went a little bit lower than what this previous BC swing was, but we saw strength come in yesterday in the FTSE 100, and today it closed above the 38.2% retracement, which is positive, and we would like to see a retest of the highs and even a move higher to complete this bigger ABCD, which is in this brown colored formation, and possibly go and touch 85.65 to 8600 for the FTSE 100. Taking a look at the German DAX, it's also really interesting. German DAX also yesterday, so 30th of May, retraced right to its 38.2% retracement and formed this ABCD pattern right at the 38.2% retracement, and that's a pretty bullish formation in my opinion. Now the interesting thing is that this swing high to this swing low, the expansion came in at 18,833, and this is where we saw the market topping, and what we saw was an attempt to take this level out, but the next day there was no follow through, and the market just went into a trading range and retraced right into the 38.2% retracement of this low to this high and formed this pattern. So German DAX, as long as this level is held, which is going to be our ABC point D, I've not labeled this, we should be expecting a move up to 19,162 in the shorter term. right? And the momentum looks fantastic. Now moving on to the US indices. So let's take a look at the cash S&P 500. There we go. So the market retraced right to the 38.2% retracement level around the 51.92 level, and found really good support as a really good looking candle which closed today. And this is where we were also expecting a low to come in per our timing model. So when price meets time, the pattern is complete. So it's a pretty bullish looking close in my opinion. And shorter term, we would like to see the 1.272, 3053.50, and on the daily chart, higher 54.60 is now possible. These are shorter term targets. Over the weekend, we'll do a video for weekly chart, so I will cover more over there. And then if we also take a look at the E-mini futures, so this is S&P 500 E-mini futures, it retraced right into the 38.2% retracement as well. So we see German DAX hitting 38.2% retracement, very bullish formation pattern forming over there. We saw the S&P 500 cash retracing right to the 30.2% retracement. We see the S&P 500 E-mini futures retrace to 30.2% retracement. So there's a lot of harmony there. There's a lot of harmonic patterns being hit right at the 38.2% retracement and finding a real good support and closing really higher as well. Now, if we just take a look at the NASDAQ 100 cash index, let me actually, yeah, there you go. It also went to the 38.2% retracement. Wow. So you see how much harmony is in there, these harmonic numbers, how they're hitting 1.272. You see a pullback right to the 30.2% retracement, and potentially what is actually also happening is it could be a ABCD formation to the upside. So we'll discuss more in the weekend's video, but shorter term, yeah, 19,386. Now we take a look at the Qs. NQ, here we go. This retraced right to the 38.2% retracement as well, and then in fact you can draw a trend line as well, and then you move it up here in a parallel fashion, and you have a channel formation going on. So this market is now moving in a channel. And then if we look at QQQ, so this is the ETF Invesco Trust Series ETF, retrace right to the 38.2% retracement. Then if we take a look at XLK, which is the Spider Select ETF for the technology sector, moved a little bit below the 38.2% retracement of the swing low to the swing high, found support from 89 period moving average, and boom, it closed higher. So there we go, all these markets closing finding great amount of support from the 38.2% retracement. And now we already had taken a look at the Dow Jones cash, but if we take a look at the Dow Jones Industrial E-mini futures, what do we see? Now this is one of the indices which had been much weaker because it never took out the highs on the futures chart of this March or April highs, but in the cash it did. And it, just like the cash, it retraced right into the 78.6% retracement, missed it by a little bit, and this is where the timing kicked in as well, and we saw a really nice bullish close, and the 78.6% retracement held as support. So this pattern that we were watching for in a VCD formation, which could in fact see this these lows being tested right at 38.2% retracement, I believe this will be negated. So I am going to remove it. In fact, here we go. This has been removed. Okay, and now let's take a look at the Russell 2000, because it's also one of the weaker ones. Here again, it moved back above the 38.2% retracement, and in fact retraced a little bit lower, rejected lower prices, closed higher. So what we were looking for, a possible ABCD which could see the price move to the 61.0% retracement. That scenario looks weaker now, especially if it is able to get above this swing high. Here we go, which is around 2093, so call it 95. So I'm going to remove this now. Here we go. And the other thing is that this index also on the futures never took out the 1st of April high. And let's take a look at it on the ETF. iShares Russell 2000 ETF. ETF also never took out the March highs. However, they were a little bit stronger than the futures market because they were closing above the 78.6% retracement. And here again, closing above the 30.2% retracement on the. Let me actually draw it for you guys again. Actually, there is no need to draw. It's already there. Here we go. Let me actually make it on the right hand side so that it's a little bit easier to see. On the right hand side, there we go. So there either you can see 30.2% retracement. It closed below that, but not by much. And there was support from the 89 period moving average now for two consecutive daily closes, closing above. So really interesting formation taking place. A lot of these markets finding support right from the 38.2% retracement. We have seen it in the in the European indices, especially the German DAX. We saw a perfect example of that in the S&P 500 cash and the E-mini futures, also in the NASDAQ, and we took a look at the QQQs, we took a look at the XLK, the ETFs as well. They're doing the same thing. Isn't that fantastic when all these harmonic numbers are getting hit exactly at the same time? That is usually, that's just pretty unusual to happen, but that in fact when there are nice bottoms formed, this is usually what happens. All these numbers, they kind of begin to sink in for all these different indices. Now let's take a look at the New York Stock Exchange Composite Index, and here we go. Let me actually clean it up a little bit. So let me remove this one because this one is in the past, so I'm also going to remove this. Maybe we just remove this one here. That was just a retracement. Now let's draw a retracement. This one has had a deeper retracement, and here we go. So retrace right about the 50%, and this is forming a bit of an interesting pattern formation, to be honest, because it had a move swing high, corrected, a bigger move high, taking out these side, now retraced. It's got two levels, and I believe this is right at the 61.8%, and there we go. And this is like where two ratios came together. A really nice move. If it gets above the 220 period moving average in the daily chart, boom, we have this trend line. Here we go. If we join the trend line like this, so we have a number of things going on around here in this level, which turn out to be pretty good support. So there we go. Looks like the model that we have been following, it worked again one more time. Now the key question is that we begin to rally from here, which we think we should at least see a pretty good rally in the market, as long as these support levels that we saw, they are held in all these indices that we are following. So there we go. Again, the model had forecasted these dates months in advance. And this is what we have been following all along. So thank you very much for watching the video. Stay in tune for a longer video on the indices over the weekend, as always, and have a great evening wherever you are. A good day, and speak to you guys soon. And if you like this video, please give it a thumbs up, and if you like our technical analysis, then please do subscribe to the channel as well. Good luck, good trading, and speak to you guys soon.